Hey, Dan Fitzpatrick here, stockmarketmentor.com. Real quick one today. This ain't going to take long. Okay, so FedEx got absolutely crushed. Kind of like a lot of the packages that they deliver to me. You know, they come in boxes, and sometimes the boxes have holes in them, and the crap that they're delivering to me is all dented up. Kind of like the stock here. Now, so, you know, if you bought it here today, you're probably not particularly happy. However, Monday could bring a different story. And this is why, boys and girls. You look at the volume here, 34 million shares. Typically, the average daily volume is about 1.6 million shares. So this would be more. It's a Dow component, and so they're just a lot. It's very, very heavily owned, and a lot of funds are dumping this stock today. So Friday's dumpage could be, you know, your present on Monday. This is a pretty simple trade. First of all, we'll just look at this on the intraday chart. It really didn't do very much. You know, here it opened at 160 and it closed at 161. So yippee, hell of a trade. However, if on Monday the stock were to trade to a new high versus Friday's high, which is 161.84, then you could see a pretty nice move to the upside, because this stock, I mean, there was so much puking of this stock that went on today that it was, you know, you almost felt bad, almost. But so there's so many hands that have dumped this stock that with this kind of selling, like, who bought it? For everybody who bought this stock today, because if you're selling it, somebody's buying it. How are they feeling? How are you feeling if you bought this stock today? You know, you got to be feeling pretty good, because if you got the worst fill possible, it was at 161.84. So you're now down by 82 cents. In other words, you're fat and happy. You're not going to sell. You don't have a regret. There's not one share that was bought today that is held by some regretful buyer. Everybody who bought this stock today is very, very happy, which means that you're not going to see a lot of selling on Monday. And stocks have to trade. That's what they do after the opening bell. So if you don't see a lot of selling on Monday, what are you going to see? You're going to see a lot of buying. And so what happens when there's a lot of folks who are really, really eager to buy the stock, and the folks that already own the stock aren't really that eager to sell because they're pretty happy? They got a good deal on Friday. You're going to have to pay up for it. You're going to, instead of bidding 161.84, you're bidding 163, you're bidding 165, you're bidding 170. You're going to get a really nice trade out of this stock on Monday. So if the stock runs above 161.84, that's when I would buy it. Your maximum risk on this should be at a trade back below 155, and that is less than 5%. You know, it's about 4.3. If you're buying it right at the high, your risk is no more than 4.3%. You can set it tighter than that, but I'm doing this on Friday. I have no idea what the stock's doing on Monday. So you're setting your stop down here, and then when the stock runs up above here, you should do really well, and you can thank me later.